Crypto is a game of capital rotation. Sometimes attention is on Bitcoin, sometimes it's on Ethereum, sometimes it's on the altcoins. It's important to understand how those rotations actually happen. When is it better to be in BTC versus Ethereum versus the altcoins? We're trying to approach that question in this video, because the effects can be massive. Have a look at Bitcoin's performance in the last month. It was pretty much non-existent, 0% gains. However, Ethereum during the same time gained 40%. So the decision to be more in Bitcoin or Ethereum just over the span of a single month matters quite a bit. There is a quite common way to measure those capital flows, and that's the dominance metric. So we look at Bitcoin dominance, at Ethereum dominance, at Solana dominance. We're looking at how much of the entire cryptocurrency market cap is in a particular asset. The most common of those metrics is the Bitcoin dominance chart. It tends to trade somewhere between 38% of all of crypto being in Bitcoin, that's the low end, and 73% of all of crypto being in Bitcoin. So this is when most people are rather comparatively risk off, when they mainly hold BTC. Historically, we had 3 points where Bitcoin dominance hit 73% and subsequently went down. Now, when Bitcoin dominance goes down, it means that Ethereum and the altcoins tend to outperform. The last real altcoin season happened at the beginning of 2021. It lasted for a bit over 5 months, and the times when Bitcoin gains ground again, they tend to be longer in duration. And we are expanding in Bitcoin dominance for the last 3 years roughly. And so this chart implies a big question, right? Will Bitcoin dominance again hit 73% until things turn around? And is this just a temporary setback? Is Bitcoin just temporarily underperforming now, and will it catch up yet again? Because we have seen similar corrections during this recovery already. And that was at the end of last year. Bitcoin dominance fell by roughly 11%. So far, we have fallen by 9.5%. So this is all within regular volatility. And it's very much possible that we're going to recover yet again. But it's best to understand the cause for this drop in Bitcoin dominance in the first place, right? Why did suddenly Bitcoin become less attractive in the last month? And will it become more attractive going forward again? Or does it make sense to shift now even more towards Ethereum? Is this a case of a capital rotation, as in people getting in more and more risk on as the bull market progresses? Because this is sometimes what happens, right? Bitcoin recovers first after a bear market, then people think there might not be as much more upside for Bitcoin anymore. They rotate over to Ethereum, and then as a final stage, they rotate over to the smaller altcoins. Are we this time rotating a bit earlier? Are we not going to hit the 73%? Or will Bitcoin suddenly recover? Let's first figure out what happened here actually in the last few weeks. Why did Bitcoin do so much worse? The answer is there's finally demand for the Ethereum ETF. Wall Street bought Ethereum massively. The demand mainly came from the BlackRock ETF. If the last 2 weeks are representative of Ethereum's long-term demand, then 4.2% of the entire Ethereum supply gets absorbed via the ETF every single year. Compare this with the Bitcoin ETF demand, that's at 3.7%. The growth has been really steep. What we see over here is the AUM, the assets under management of the Ethereum ETFs, measured in Ethereum. So in that way, we ignore the volatility of the Ethereum price itself. We can see that at the beginning, the Ethereum ETF had a somewhat slow start, but in the last few weeks, this is accelerating massively. And this is what caused the Ethereum outperformance. Compare this with the AUM for the Bitcoin ETF. That's way less volatile, right? We just see continued accumulation. It's not that bumpy compared to what's happening with Ethereum, right? With Bitcoin, we just see long-term purchases. There's a very good case to be made that this bottom in Bitcoin will get bought up and that this arrow in blue will actually prevail, that we're getting closer again to the 73% dominance. And here's why. Bitcoin does not just have demand through the ETF. Bitcoin also gets bought via treasury companies. A lot of the company-specific Ethereum demand happens directly through the ETFs. That's not true for Bitcoin. Have a look at this. This is the demand just by the treasury companies, and it's quite significant. It's more than 1 million Bitcoin that's now held by those entities. So this is accelerating adoption extremely quickly. And given that the annualized absorption metrics are now so similar between Ethereum and Bitcoin, Bitcoin does have a long-term edge through those treasury companies. It's important to understand that the prices currently are not moved by the Joe Schmo of this world. Retail really doesn't have that much more impact on the crypto prices, especially on the larger cryptocurrencies. Just have a look at the number of Bitcoin wallets that have at least one BTC. This tended to grow very, very consistently up until the beginning of 2023. So in the last 2.5 years, this orange line is not going up that much anymore. It's rather trending downwards. Have a look at the number of transactions on the Bitcoin network. That's also not growing, even for a longer period, for the last 8 years roughly. So really, Bitcoin isn't used for transactions anymore, right? It's not digital cash. It's a savings vehicle. It's superior savings versus, say, the stock market or versus, say, gold. That then begs the question though, right? When the Ethereum ETF demand is high, when the Bitcoin ETF demand is high, and when Bitcoin has on top of that also all those treasury companies, why did Bitcoin perform that poorly in the last month compared to, say, Ethereum? And then, of course, even more important, how will this continue from here? My impression is that the Ethereum ETF demand is slowing down already. Week after week, the peaks tend to get lower and lower, and we tend to normalize to a regular purchasing rate. The ETF, of course, still has positive impact on Ethereum, but it won't be as massive compared to what we saw since the beginning of July of this year. With Bitcoin plus the treasury companies, the purchases seem to be much more steady. The reason why Bitcoin was struggling so much in the last month is the long-term holders. They sold since the middle of July. In general, the long-term holders tend to sell when Bitcoin's price is high, and they tend to buy when Bitcoin's price is low. Here again, they sold when Bitcoin's price is high, and now they're selling again. So this is fluctuating, this is oscillating, and it does have an impact on the momentum of the price, of course. But since this is oscillating all the time, it wouldn't be surprising if the long-term holders start buying at some point again. And then all of a sudden, the momentum will turn around and we will get real gains in the BTC price again. I think this is a phenomenal time to buy into Bitcoin versus Ethereum, versus Solana, and especially versus the altcoins. Here is how I think those cycles in cryptos are made. As we come out of a bear market, it tends to be the long-term holders. It tends to be the Bitcoin maximalists that just buy into the bottoms. They believe in Bitcoin as the hardest of the monies. They just buy for any price just to stack sats. Now, as the price goes up, the money moves more and more from those long-term holders to short-term speculative holders. What we see over here is the hodl waves. So it looks at the entire Bitcoin supply and it checks how much of that supply is held by wallets that have not moved Bitcoin for the last 10 years, or for the last 7 years, or for the last 5 years, etc. Let's take away all the long-term holders. Let's just look at the short-term holders. We can see as the price goes up, a lot of the Bitcoin supply moves from the long-term holders' hands into the short-term holders' hands. So the long-term holders are taking profit. And the colored area that we see here is the percent of Bitcoin supply that has moved within the last 6 months. So again, when this is high, there's a lot of nervous capital in the market, right? It's not anymore the diamond hands. And here is what's so positive. Even though the Bitcoin price is so high, the percent of BTC that's held by the short-term holders is low. So the market is not heated. There's not a lot of Bitcoin just in the nervous hands that want to speculate on short-term price appreciation. The current rally seems to be very, very stable. And so really long-term, Ethereum's tokenomics aren't that much better compared to Bitcoin's. They might even be worse very soon. Yes, Bitcoin does have its mining with 0.83% supply expansion every year, and Ethereum supply expands slightly less quickly with 0.74%, but this will change over time. In Q2 of 2028, so in less than 3 years, we get another Bitcoin halving. And then we only have a supply expansion of 0.41%. And then the big question is, will Ethereum adjust their tokenomics to be even less inflationary? Nobody knows. Crypto is about being part of the minority, right? It's about doing the thing that most people don't do. And most people did buy Ethereum in the last month, and the Bitcoin dominance dropped, but there is a good chance that it will recover, that Bitcoin actually going forward in the next 1 or 2 months will outperform Ethereum and most altcoins again. I'm going to bet on that. I'm going to switch a lot of my Ethereum into Bitcoin again with that crash, with that correction of Bitcoin dominance. There's simply too much potential, and I think it's unlikely that we're suddenly going to see a rally into the altcoins already at this point in the cycle. Again, because it is Wall Street that's driving prices now. It's not anymore small retail. And Wall Street is not going to buy Dogecoin and Shiba Inu anytime soon. Now there's the approach to simply just buy into Bitcoin long term, right? To buy, say, once a month to dollar cost average in, say $1,000 every month. And that is a winning strategy because there is a lot of volatility, and the more volatile an asset is, the better it is suited for regular purchases. And had I done this, I would have gotten this light gray return. Instead, I outperformed just dollar cost averaging into Bitcoin. I got this black line in return. The Bitcoin maximalists say that we should forget about all of the altcoins and that Bitcoin outperforms the altcoins most of the time. Everything goes down against Bitcoin long term. So in the end, just stick with Bitcoin. That's what the maximalists say. But I think it's better to actually take advantage of this market asymmetry. Because while the Bitcoin maxis are right that most altcoins underperform Bitcoin most of the time, and that trying to find the next 10 or 100x meme coin is a losing battle long term, while this is true, we can still take advantage of that underperformance. The altcoins tend to do so poorly because of supply expansion. So users of the platform of the altcoin, or maybe the early investors in the token, or maybe the team, they get token unlocks. They get more and more tokens available over time, and they might dump those tokens on the market, depressing the price. For example, here, this is the circulating supply of the balancer token. It's a very typical DeFi token. We see this typically across the entire altcoin market. And if the supply grows faster than the demand, of course the price has to come down, at least relatively speaking. And so this is then the balancer price relative to Ethereum. It just goes down all the time. And we can flip this. We can take advantage of this. If we go long Ethereum and short balancer, or if we take out a loan in balancer, swap this into Ethereum, we get this return here. And that's how I made this outperformance over buying and holding Bitcoin. I shorted poor altcoins and went long Bitcoin, Ethereum, and Solana. And in this video, I actually want to share this for free over here. How can we get this kind of return? How did I achieve this kind of return in the past? There are several approaches, and I'm sharing now the one that I'm using for several years already. Go to the platform Aave. So that's aave.com and open the app. Over here, you can borrow several tokens. So you're providing some kind of collateral. It's a borrowing and lending platform. You provide collateral and then you can borrow against that collateral. And what you want to borrow is the balancer token, right? That's a token that tends to go down versus Ethereum all the time. Thus, if we borrow balancer, if you've got a loan in balancer, and we then swap that balancer versus Ethereum, and then we wait for balancer to continue to go down versus Ethereum, we suddenly have profit, right? Our loan, our debt is going down in value. Our asset is going up, relatively speaking. And then once we want to lock in our profit, we just pay back the loan with the appreciated asset. It doesn't cost much at all to borrow balancer. It's 0.31% per annum. Yet the price is going down so consistently. I made tutorial videos to the premium members about this strategy in detail in the past. And again, it was a very nice moneymaker. This is why people stay subscribed to premium, because the membership basically pays for itself if you've got some capital. But I found an approach that's even better, and that's currently my focus. I started this out 2.5 months ago. It's again relative valuation bets, but it's not with borrowing and lending platforms. It's instead with perpetual futures. I started with 40K, and then after 2.5 months, this turned into 60K, so 50% return. I don't expect that the growth rate will be that strong going forward, but still, I do think that in general, this is a winning strategy, right? Simply because the insiders, etc., they cash out over time, long term, and depress the price. The problem with perpetual futures is that we need to be very diligent around our risk management. We have to use very tight stop losses, and we then have to adjust those stop losses regularly. We have to find the asset that's most deflationary, that might have seen a short squeeze, etc. And while I'm sharing all the trades that I personally do, many people don't have the time to copy trade. And so I got asked regularly by the members, can't you just provide some kind of liquidity pool? We provide money to that pool and then you trade for us. And I finally started this just 2 days ago. It does not use Aave, it does not use borrowing and lending platforms. Instead, it uses Hyperliquid. And this is a tutorial video on how to use the Bitcoin strategy copy trading vault on Hyperliquid. So that's this platform over here. The platform is growing massively. So in less than a year, it attracted almost 2 billion worth of value. And I've created a vault, so a capital pool where the annual members of Bitcoin strategy can deposit to and then simply get the same kinds of returns. If you're just starting out and you've got some time and you don't have that much capital yet, then you can do this all manually, right? You can just go through the tutorials, you can watch them and then learn how to do this all yourself. I am sharing my own trades as well, and there are plenty of people that do this very successfully in the community. So if your crypto portfolio isn't yet $5,000 or $10,000, it's below that, then it makes sense to just go with the monthly membership and do the trading yourself. But if you don't have time, if you maybe got a business to run and you've got way larger amounts to deal with, you don't want to hassle with all the risk management, etc., then the annual membership is for you. Because for the annual membership, where by the way, you're also saving a bit of money, you get access to the copy trading vault as well, with all the instructions on how to actually deposit your funds. And while I cannot guarantee that we make another 50% in the next 2.5 months, I will do my best to achieve positive returns. This strategy has outperformed buying and holding Bitcoin for more than 4 years now. And I don't see any reason why it shouldn't do the same using perpetual futures instead of borrowing and lending platforms that we used in the past. A link to Premium should pop up directly over here on the screen. Just click on that. It will lead you to the website. If it's your very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers!